Hi, gang. Larry Williams welcoming you to Stockcharts.com. It is time for the summer season. People are going to start traveling. Even with these high gas prices, people will be moving around. That means the markets will be doing things, moving around as well. So I'd like to give you my view of the future, where I think the market's going. Let's take a look. First, I want to look at our market tools. Really, three major tools in the marketplace. I don't think a lot of people know how to use them. Fundamentals are critical of a marketplace. Markets move for reasons, fundamental reasons. Fundamentals show the value. Value will ultimately be rewarded, but maybe not today, maybe not even this month or this year. But value orientation is really important. Then technical analysis brings to where we are right here, right now. It shows the current state of the market. Are we bought, oversold, we're in a trend. It tells us where we are. Cycles are a real breakthrough. That's become my passion because they show us where we should go in the future. When in the future we should see selling and buying opportunities. We'll be looking at all of those things today. My five best friends in the marketplace are who, that's value. What is what stock or commodity has value to it. And then where we are now, that's technical analysis, and finally cycles. But the why we choose to pull the trigger now is really all of these. I don't think you can live with just cycles or just value. You need everything to really be successful at this business. Well, let's start to look at some of those things. The big thing I'd like to focus on in terms of cycles is the Nasdaq cycle. This has been a strong cycle in the market going back 2009. You see this red wave. The overall cycle is a low here, a low over here, run up and a run down. I want to focus on the strong up leg. We see this red part of the cycle. In other words, within cycles, there are waves, and some of these waves are more significant, you see, than other waves in the marketplace. This is the wave we're in now. And you can see in 2016, cycle wave took off again, the market rallied. And that's where we are now, guys and gals. This was 2023, and we're in the very bullish cycle wave in the NASDAQ. Now, I haven't focused on the NASDAQ a lot, but because the Dow has been kind of squirrely this year, I started looking more at the NASDAQ, and I see here it is. We're going to enter a very bullish wave in the cycle of the NASDAQ, and that cycle is an upcycle. In fact, if I look at this going back to the inception of the NASDAQ, we have rallied. That's right. 90% of the time we've been in this wave of the cycles and start to turn up in June, a little pullback in August, and then further higher. So, gosh, this is like a bullish opportunity to me. Now, what prices haven't done, though, people would like to see prices decline to buy. That's human nature. But sometimes they just go sideways and then take off. You can see that in some of these past examples. Prices were sideways and then took off. So that's not an exception. See, prices were sideways in here, and then prices took off to the upside. We don't have to have a decline to get a rally. Most people are looking for a decline to get a rally, but we haven't seen much of a decline here. So if we get one, great. If we don't, I still expect this is a bullish time in the stock market. In fact, for my 2026 forecast report, we said expect higher prices in 2026, buy market breaks. I thought the absolute low, and I was wrong in saying that, would be about June 16th. That really should have said the cycle low, a time could be a buyer in the market. So we're about June, about the middle of June, I would expect the cycle that we've just seen to really kick into the upside, regardless of where we've been going up or down. Bottom line of the forecast report, expect 2026 will be another bull market. That hasn't changed. The question, the forecast report, does that mean higher inflation in 2026? I said, I sure think so. And we have seen higher inflation. The big thing about inflation is its relationship with the bond market. And the forecast report said it's for lower rates into the first of 2030. That's a long-term view. So let's look at bonds.
Hey guys, it's Grayson Rose. I hope you're enjoying this video here on Stock Charts TV. Just want to remind you, if you want to trade and invest and analyze the markets using the same toolkit as these experts that we have on the Stock Charts TV channel, you got to be a Stock Charts member. You can level up your toolkit right now with a free 1-month trial. Visit stockcharts.com, get started with that big green button at the top of the homepage, level up, use the same tools chosen by the pros that you follow here on Stock Charts TV. Now let's get back to the video.
We're going to stockcharts.com. We see the blue line is the seasonal pattern for the bond market. It's up right here, right now. We should start to see a rally we usually have in the bond market. Notice I'm using weekly charts here. The last time we saw this rally phase in the seasonal pattern was right back here. We saw it over here. So we're in a bullish phase. And then we can also look at my cycle forecast. That's also available stock chart. It also says bonds should start to rally right here, right now. It's did a pretty good job of telling us in advance. That's what cycles do, show us in advance when to expect declines in the bond market, rallies in the bond market. You can see there's been a pretty good forecast of what's going to happen. But more important, our money flow index shows that large money has recently started buying the bond market. And the last time that happened was over here, saw it over here, we're seeing it over here. These are really bullish fundamental considerations when money flows into the bond market from professional traders. And that's what we've seen recently. It's really started to happen here. One reason to be bullish for bonds, but there's more. Commercial traders from the Commitment to Trade report, if we look at this now going all the way back to 2023, the red line shows their actual buying. As this line comes up, they're buying more. They were heavy buyers coming into this low, heavy buyers coming into this low, heavy buyers at this low. And look what they've done recently. Buy, the entire decline. How much did they buy? This is the highest level of long positions they've had all the way back to 2023. In other words, they've been aggressively long. They've been doing a lot of buying in the marketplace. And traditionally, prices rally when there are big buyers in the marketplace. When we consider that we're also at a seasonal low, a cycle low, and on an intermediate term basis, money has flowed in on the long side of this market. Oh gosh, guys and gals, I think we have a buying opportunity here. Just where? Well, let's take a look. Now we're looking at a daily chart. Here's the seasonal pattern and daily chart. You can see we're right at that low. Money came into the marketplace. So my strategy is going to be to wait for the first short-term pullback in the bond market and then look for a buy point. We started to rally off low here. We'll probably go a little bit higher, but at some point we will have a pullback. So what I think we've seen is the first speculative up move in the market, pull back. As we pull back into this next decline, there will be one. I don't know when, but in the next 3, 4, 5 days, we're going to start to see a pullback in this market. That's going to set up, I think, the springboard for the natural cycle and for the seasonal pattern to kick into this marketplace on the upside. So there's a really good trading opportunity I want to point out to all my friends at Stockcharts.com. One more look at the stock market. There's another interesting explosive wave in the Dow Jones Industrial Average. Notice the wave is part of the cycle, but we go up and then boom, we rip off to the upside. Boom, we rip off to the upside. The market's coming down. We hold that. Whoa, we get this big rally in the market for what? Almost 4 months. So this wave is apparent, and we've seen it quite often before. There's a kick up and the market goes up, kick up, the market goes up. See it over here, the market's going sideways, right? Then boom, away it goes to the upside. And the last time we saw it right here, went sideways, explosive move to the upside. This is where we are now. We're in this trading range with a bullish bias, but starting about June, late July, August, we get in the explosive part of this market. So you might want to consider that for your longer term investments. This explosive wave is coming up in the market. We are in a bullish pattern, and the explosive wave will become before not much longer. So that should certainly be part of your investment strategy and your investment thinking. So the bottom line is stay the course. There's no bear market. I know the Cassandras are out there. It's Donald Trump. It's not Donald Trump. It's money. It's whatever. No bear market. Stocks will trend higher. So your strategy, buy breaks. Don't be afraid of breaks. Step in and buy weakness in the market. We continue to be in a bull market. So that's it. I hope this has been helpful to you, give you some insights into the market, some trading opportunities. And above all, as always, all of us, myself including, thanks Stockcharts.com for making this all possible. And now, until next time, as always, Larry Williams wishing you good luck and good trading.